most accountants don't want to do bookkeeping, right? They want to be in that advisor type position.
What's going on, everybody? Welcome back to another episode of Curiosity Class. Today, I am joined by Adrian Gutierrez. He is the co-founder and CEO of Ledgre. It's an AI-native real estate bookkeeping company. And I'm super excited to dive in and talk about what that is, how you got started, and learn anything and everything about it, man. So thank you so much for being here.
Thanks for the invite. I'm super happy to share whatever it is about Ledgre or my background. Hopefully it piques people's curiosity. So.
Totally. Man, what a great plug. Curiosity. You didn't pay you extra for that. That's awesome.
No.
So yeah, why don't you give people a quick overview of your background? Like, how did you get into this?
I would say it's been a pretty long, confounding journey of just, I actually studied molecular biology. So I was doing my PhD in that. I realized I wasn't going to make any money. And so a WashU alum reached out to me, offered me a job in product out on the East Coast in New York. And so I was one of the lucky few that got a start in product right away. Most people go from marketing, sales, customer support, what have you, and work their way into product management, product development. I was able to start from the beginning. Really, it was like I jumped through gaming tech and healthcare tech all the way into I decided that I wanted to learn more about real estate. I was at the point of wanting to purchase a couple properties. My family invests together as well. And so I realized there's a big gap, and I can go watch YouTube videos. I can listen to podcasts, but I don't feel like it's going to give me that hands-on operation. And funny enough, TurboTenant, which is a huge property management software company now. I think, I saw the other day from my old CEO that they've crossed 300 employees. When I was there, I was number, I think, 20. And so huge growth in the past 2 years that I haven't been there. And they were right down the road, I think 8 minutes away from my house that I just randomly moved to in Colorado from the city. They were looking for someone. They reached out to me. I was actually flying out to Serbia at the time. And they had their engineers in Serbia. And I was like, oh, that's cool. I'm not going to meet them. But when I come back, we can talk, and so I came back and I just hit it off. I mean, I went to talk to Seamus, and that's the CEO. And he and I had 30 minutes. We ended up talking for, I think, an hour and a half, just full product there. Came back in for the next interview, did a whiteboard, ended up talking to him more. I think total process, I was there for 3-4 hours just talking. We were just diving into everything. And so it was kind of a no-brainer when they made me an offer. And I went and worked there, and I led the whole entire embedded finance side of everything. When I got there, they had moved really no money. By the time I left, we had moved more than I think we were hitting $2 billion annually of rent. We were making, more than $300,000 a month just off the embedded finance product line. Pretty much owe my career to that. And I was able to talk to thousands of real estate owners, investors, property managers. And so that gave me that experience that I needed of okay, if I'm going to have my own portfolio, if I'm going to go through this whole entire process, that's from simple all the way to complex, I got all of that from them. And during my time there, and I went long-winded to explain this. During my time there, I always said I wouldn't build accounting and bookkeeping just because of how minutia you need to pay attention to all the details, all the minutia of the details. And so we partnered with another company called REI Hub. John Carrier was the co-founder, CEO there. Really brilliant dude. I remember telling him on the call, I'm like, I get your product, which is probably the first time I've ever said that about accounting and bookkeeping software, because you jump into QuickBooks and you're like, what the heck?
It's the worst.
It's the worst. And everyone complains about it. So that's why 70% of the market is still doing, Excel sheets, or pretending to at the end of the day. And I told him your product makes sense for even someone like me. But it looks like someone did it in Microsoft Paint. So we had kind of this sparring back and forth around it, but we partnered with them, and really we were able to sell that so easily. Like everyone has that bookkeeping accounting need. And even if you had to do it in REI Hub, which was still pretty manual, it still made sense because the workflows made sense. And so TurboTenant bought them. And that kind of launches this journey of like, I left TurboTenant, I went to Livable, I was head of product there. We're focusing on lending so that people could split their rent payments. Livable's done fantastic. They've been bought by RealPage. It's been a great outcome for that whole entire co-founding team. I was just obviously one of the employees. But like fantastic people, learned a lot there. But during my time there, I saw that REI was getting bought by TurboTenant. So like the wheels started turning, in my head. And I was like, they're the really sole provider in this space. And AI is now becoming something that can execute these workflows. So we can take away this kind of like manual need of people to be like mini accountants or mini bookkeepers. And so that just kind of like churned everything in my head. I left Livable early. Those guys were great. They advanced my equity. Like they're like, we understand it. We know you want to do something of your own. And so I jumped out and I got involved in it. And with probably the first year, I was doing everything by hand, right? Just doing people's bookkeeping by hand, the accounting by hand, putting it back into like the software to make it look like, something was actually happening. And that was kind of it, so that I could really understand the AI and like where we could plug things, where we could build it. Um, and so that's what brings us to current day. I guess is the best way I can give you all the background to get to today.
Dude, that's amazing. So a couple things I want to kind of pick apart a little bit more is like, okay, so you mentioned a couple things. So you were at TurboTenant, you went to Livable. Can you explain I think most people listening have a pretty good understanding of real estate investment, but for those that don't, can you explain the core problem that you're solving with Ledgre?
Yeah. It's really, most people would probably think it's productivity that I'm trying to solve for, trying to save real estate investors the hours they might waste on crafting the Excel sheets, on crafting QuickBooks. It's really not that. It comes down to scale. When you have all these properties coming in, and you also maybe have a compounding problem building there because you haven't separated out things into different LLCs, or you don't have multiple bank accounts, what have you. What you end up having is a blind spot in your finances. And so
Mm-hmm.
that becomes a problem the minute you want to bring on other investors, right? That becomes a problem the minute you want to start getting better deals from banks, and stop running things through your personal name as well. But it's just that it's getting your actual insight into your financial performance, right? Not only income statements, but also being better for tax time, saving money on like tax returns. Because realistically, the money you should be spending is on having like your CPA or an enrolled agent helping you scale out by taking better advantage of the IRC, right? Taking better advantage of those tax strategies versus just having one chance, per year to talk to them. And the thing you're doing is passing over a shoebox of receipts. And then you're like, wait, why didn't you save me all this money that you could have? And it's like, well, I didn't realize that you just bought a property that you could have done a cost segregation study on and
Right.
depreciated this a lot better, right? Like you didn't tell me until today. And guess what? Like
It's
it's
March
April.
31st.
Yeah,
Yeah.
it's March 31st. Like I can't strategize with you when we're talking about some of the past 9 months, like that happened 9 months ago. So it's
Totally.
really that. It's given the financial insight into the portfolio and take out the cumbersome workload of, everybody knows they need this, but most people don't want to do it. Or it's like a New Year's resolution. You go to the gym for 5 days,
Right.
right? And
Right.
then you come back and it's the end of the year again. You're like, oh, wow, what happened to 360 days?
Totally. Totally. And so from when did you kind of you said you were doing it by hand, so to speak, for the first year or so. What was that timeline? Was that like 2024, 2025, 2026? Like, and then when did you start to kind of implement the software component of it?
Yeah. So September 2024 is when we really got started. I would say it was all the way up until around October of 2025 that it was really by hand that I was doing things. We built software, right? We still put like components in front of users. We still built like the connections to bring in like their information from Plaid,
Mm-hmm.
analyze spreadsheets and stuff like that. But it was still very much like, okay, I'm going to look at all the information we just ingested and I'm going to figure out where does it need to go? right?
Hmm.
Like if they're uploading property closing documents, what have you, like I need to know where it goes because I need to see like from the ambiguity that comes in. How do I get that mapped before I ever try to put like an actual logic layer in there? Because if not,
Mm,
it's just going to be wrong. And I mean, I think most real estate investors know this is like there's a mentality shift that happens when you have a couple properties to when you have a lot of them, right? Like you're still thinking you're a hobbyist more than a business owner. And
hmm.
so like I get the most random documents sometimes, right? Or I get half complete documents or I get half complete financial details. And then all of a sudden, 2 months later, someone's like, no, these books are a little bit off. And I'm like, well, I'm seeing like these transfers to this account that ends in, I don't know, 7294. What is that? Oh, that's my other bank account where I also have other things. And I'm just like, I'm like,
Garbage
I
in,
need
garbage
that
out.
one. Yeah. Yeah. And I'm like, I need that one. But it led to this really interesting insight is that you would think that as like real estate investors, we know like all the inputs we need to give to like our financial people. Um, but realistically, we don't, right?
Hmm.
Until we see those context cards come back and we're kind of like, hey, yeah, I told you I have 5 mortgages, but I never actually told, like, I never gave you the mortgage document to understand how
Right,
we split out, right?
right,
Or the
right, right.
terms. And so it's like this interesting thing of like, real estate investors know some of the inputs. They don't know all the inputs to get to where like someone could get like clean books out or clean reporting. And then it's also on the output side is like they mostly know that they want an income statement. They want to, see Schedule E, stuff like that around tax time. But they don't realize that you can then start doing reporting on like ARR or those other reports, when you're doing like financial forecasting to tell you like, hey, it might be the best time to sell your property now, right?
Hmm.
Versus like keep it going. Like it might just be great for you right now in the market. And then you can go to another mid market and buy another, whatever.
Hmm.
There's so many different tools that can really help you if you have the foundation right of your books are good, right? We know what
Totally.
you're doing. We know where you can go. Um, and so that's kind of like, that was everything from doing these things by hand and hating every single minute of it, but at the same time loving it because I knew like it's getting me to where I need to go.
Totally. And so, how many people have you signed up for this so far?
So we have a before and after. We did it by free. We did it free for quite some time.
Okay.
And free wise, we passed over I think like 1,500 people.
And was the prop just like, hey, I'm gonna look at your books and give you some feedback for free?
The prop was selling the software still, was selling like, hey, we're going to automate your books, do it. Realistically, it's just Adrian and, the other co-founders behind the scenes doing it, but it's going
Right.
to feel fast enough to where it gets done. And it was still trying to sell like a core value prop. And it was for free, right? Or it was for a trial until X date. And then we just never charged people. And then once we got confidence in, probably to answer the second question you're going to ask is when do we start charging? When did that change? It was when we realized that we were doing these things really fast, when we already saw these workflows and we saw the repetitive like natures come in and we understood it's not going to take us hours to do this. It's going to take us 30 minutes to do it. Right. And so
Hmm.
these are the inputs we need from you. Once we started doing that, that's when we started charging. And that's when we started charging either a flat annual fee, for like 400 something dollars a month, or we're charging a few $100s a month, and then bringing them across the finish line. And so, that was an interesting time period, but we made that shift to paid. We're like, we need to make sure that people are going to pay this because that's the only way to build a real business at the end of the day.
Right. Right.
Um, and so that's where we are today. And that initiative started launching December of 2025.
Okay. And how is it going from? Because I mean, I don't want to assume, but I'm assuming that like if you're going to a real estate investor, like, hey, this is the value prop, and to a real estate investor, it makes total sense. I'm like, yeah, sure. I want to look at your books and streamline some of your processes. I'll do it for free. Yeah, who
Yeah.
wouldn't take that deal, right? Like that's awesome. But then
Yeah.
when you come back, you're like, okay, cool. This is all the time I'm saving you. I'm going to start charging you money now. What was the conversion between people who were like, yeah, take my books for sure, versus actually took out their wallets and paid?
So that conversion, last time I checked, and last time I checked, I think last month was 39% trial to paid conversion.
Dude, that's pretty good.
Yeah, it's really insane. And that's where it's like been that was our light bulb moment really to be like, okay, we have something that's not, I don't know, it's not a couple $1 million that you could ever grow it to, but we have something that like if we pair this correctly with software and we pair it correctly with like the right people, like now we're talking about a business that's really, really highly valuable, right? A
Totally.
true software play. So
Totally. Dude, that's amazing. And who you like you refer to as we and co-founder obviously is part of your title. Like again, I don't want to assume, but I'm assuming you're
yeah.
kind of the product guy here.
Yeah.
So who are the other folks involved and like what are their backgrounds?
So the other folks, it's two more co-founders. They came in honestly after me. I was always in touch with one of them mainly because like we've known each other for um, how old am I? 32 years. We've known each other for 32 years. He's my
Okay.
brother.
Okay.
You'd see it. Joseph Gutierrez is his name. He's very much product with me, but he's all on the technical side.
Okay.
So his background has been he was doing AI ML. He was studying it as PhD over at SLU, so St. Louis University, and then he got poached by the government. So he started working for the Defense Department. He started working at Boeing. He worked for the NDA. He's worked in like cybersecurity startups, and it's all been in that same veil of AI ML. And I'm not talking about Claude. Claude Code dropped May 2025, right? I'm not talking about like what people are now experiencing, but I'm talking about the reason why there's people at ChatGPT, OpenAI and Anthropic making $1 million in salary. Talking about like the true AI ML people of the world, which are very far and few. I'm lucky enough to be like in a position where that's my brother, and I'm lucky to be in a position where he's willing to not make that much money just to work with me. Even though like I stress him out a lot because I'm just like, this is what we need. This is how we need to get there from like the business side. I'm like, I need you to understand this. I need you to push back on it. And he does. And I'm like, and then I need you to be the one that goes out and builds, 70, 80% of it. And I'll build the rest of it.
Yeah.
And so like, he loves me, but I think at times he hates me.
Totally.
But he's a great guy, and he's really dove into this of like he's read the Internal Revenue Code, he's read so many accounting books, he's read so many real estate books, he's just gotten full tilt. Even though like we have properties, this is like he went above and beyond to really understand the problem space more because I'm usually the finance guy that runs it all. So like he's just more along the lines, here's my contribution, let's go buy another property kind of guy.
Okay.
Um, and then we have another one. I've known Max O'Rourke for, I think we met 2022, maybe 2021. I forget when I started working at TurboTenant. But he was one of the other PMs that started with me at TurboTenant. So he was on the more of the like marketing and screening applications side of things for property owners, building out all that, building it out for the tenants as well. His background's been in like investment banking. He's worked at Abrigo. For the past few years, he's been working at his own like consultancy firm for like go to market on like e-commerce and stuff like that for brands. And so he's the other co-founder. He handles a lot of like the go-to-market type stuff. And then obviously like it's all three product people pretty much there, but that's primarily my role outside of like the operations side of things. But um, we're pretty solid team, domain expertise all around. Everyone has properties as well, like is super into it. And so it's at the end of the day, it's a little selfish because we're eventually like we're just building something for ourselves too. So
Yeah. 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 Dude, that's awesome. I love that. That's so
yeah.
cool. Um, does anyone have a CPA background? Like,
So I do in part. I ended up going back to school to do my MBA in
okay.
accounting. So I have like that huge. I have that knowledge there. Realistically, like I never sat for the CPA exam, so like I was like I'm not gonna do it.
Yeah.
But what we pulled on board was I was able to find quite a few. Funny enough, through like different conversations with different people, a lot of other property owners that are CPAs.
Okay.
And so those are the guys that are actually on our team. that end up being involved in our funnel, that end up doing and reviewing like the outcome and the books and closing them for people.
Got it.
Right now, like we have one that's fully contracted with us. And then we have like three more that are sitting there just waiting for volume to fully pick up. But the better that we've been making the automation, the less people we've had to actually like worry about employing, because our CPA can handle, our CPAs can handle about like, I think it's like 200 clients each, like once as we've been building out everything. So,
Dude, that's incredible. And where, like, as you think about growth, like where do you see the future? Like to you, what does success look like?
um, there's always the dream of like you're building a huge 200, $300 million company, or even larger. Um, I think I'm probably gonna like annoy my investors at this point, but I'm even fine building one that's, smaller but profitable, and like you're bringing in a really high margin game, and your team is tight, and small, and like most of the money just goes back to like profit sharing, what have you.
Yeah.
But I think there's two sides to it. We can either go that route, or we can go really large and pretty much open this up to the masses. Um, my research and the amount of bookkeepers and accountants that I've talked to here, most accountants don't want to do bookkeeping, right? They want to be in that advisor type position, doing the strategic, kind of just planning aspect, and obviously taking care of the taxes. But taxes is a numbers game for them and a minutes game for them. If they can file tax returns 10 minutes faster, they're happier, right? They
Mm-hmm.
can close out that, they don't get as stressed, and then they can spend the rest of the year maximizing their client's portfolio. They're super happy. They're having a great relationship. The reason I say all this is the cost is kind of crazy. Is like CPAs are fantastic, and you should keep, as you level up your portfolio, you should swap CPAs, right? And you should always like make sure that they're aligned with you. The person that does your personal taxes, probably shouldn't be the person that files your tax return for 200 properties,
Mm-hmm.
if they don't have real estate experience. But I say all this because you have the cost aspect that pull into it. Property management, property ownership has a margin aspect to it, right? Outside of just waiting on properties to appreciate and then selling them. And so, paying a CPA to be on your book roll or your payroll probably isn't the best thing you want to do, when you're small. So the thing I see vision wise is even bookkeepers, that there's no licensure to be a bookkeeper. And again, if you don't have someone that's real estate specific, you're probably still, correcting a bunch of those items anyways.
Mm-hmm.
Um, and so the crazy thing, and I say all this again long winded to say, these bookkeepers can pull, 25 to $40 an hour, right? CPAs, if you're doing oh my God, I can't say it. Hourly rate is, I would say median is like $120 an hour or more. It's really hard. It's really hard to have that when you only have a few properties, or when you have 20 properties, right? Like once you start scaling and you're having like more than $250,000 in revenue coming in, that's probably where it becomes a little bit more realistic to have that cost. But at lower
Mm-hmm.
levels, it's not. And so that's where I see Ledger kind of sitting, is the better automation we can do, the more clients we can have with the CPA, the less time the CPA has to actually spend on the book hours, and they can spend more of that time on actually helping the client strategize, right? And pointing out, those areas of opportunity for a fraction of the price, right? Our prices, we already know that we're going to lose money on intake, right? Like bringing people into it, getting them caught up to July 20th. Um, and that's fine for us, because the reality is after that, we're going to spend, a smaller amount of time doing your monthly bookkeeping, but you're going to spend more time interacting with the CPA that's on your account to figure out like how best can I, plan ahead, or how best can I react to whatever's happening in the market. And you're going to get the value out of your subscription on that front. And we're not going to have to worry too much about like your books being out of date or anything like that. So we know that our insights are actually correct.
Right.
So I won't say I'm on a mission, but I'll say like the vision is really, can we can we open up access to as many real estate investors from day one as possible, whether you're small or whether you're really big, and get them that benefit of having, their books up to date and that conversation and relationship with a CPA to help them outside of just tax returns.
Hmm. And how do you run into, because I imagine most people's response is probably like, no, I'm good. Like my system, I know my system sucks, but it's working and I know what it is. And, I've been with my CPA for whatever, 15 years. So how do you, you're like, okay, yeah, fair enough. Like there's enough people waiting to get onto the platform that those folks might not matter? Or like, how do you overcome that initial hesitancy?
So the hesitancy of having a shitty system and not wanting to change it is one like I don't I don't fight that objection. It's something I've learned. When people know that they're doing something really wrong and it's hurting them and it's costing them time, it's costing them money, but they don't want to fix it, either because they want to spend a little bit more money to fix it or whatever the reason is. It's the same thing with investment. Is if there's an investor that doesn't know your market or doesn't fit the thesis of like your company, you're never going to be able to convince them. So
Mm,
really, it's I give them the advice I can give them. I usually it's just if you don't want to do this, the only thing I ask you is X, Y, Z, and I walk away. And the funny part about that is, you would think I'm losing deals, but reality is I've had a good amount of those guys come back to me after 6 months, 8 months, and be
yeah.
like, "Hey, like, no, yeah, let's try this out." On the second side, for those that already have a CPA, it's actually the conversation I keep having with Max is we're not trying to replace their CPA, not yet. The reality is, what we're trying to do is just make sure that their books are there. And in this game, it's still very much relationship driven. And so, I can tell them my software is going to complete the books 100%, and they're not going to believe me. They're going to try it
Hmm.
out. But then when they come in, then they're going to start asking questions. And we've seen this already when we tried out a pilot around like full automation. And people come in and then they want to break apart the books, they want to break apart everything. And they're not accountants, they're not bookkeepers. And so then it ends up just being more confusing for them. They spend more time trying to understand how Ledger works than, reaping the benefits of it. And so that's where like us dialing it back and being like, okay, let's put a CPA onto here that's going to review all the output and close it out and put that stamp on it. That's where like we solve the trust. And so that's what I say is like, we're not trying to replace your CPA. What we're trying to do is end up giving you the information that you need throughout the year to be able to have a better conversation with that CPA that you trust.
Hmm.
And if it's the CPA that you've already had for 15 years, or it ends up being the Ledger CPA because, now he already has access to all of it. He already has all the context. And now you want to go above and beyond that relationship and strategize with that. Cool. We'll accept it, but it's not our primary focus yet.
Got it. Got it. Got it. Well, it also sounds like it's almost like a second set of eyes, right? You're like, hey, like we're going to bring your books up to date. We have a CPA in house that's going to review everything. If you want it, take that back to the CPA you've been working with for 15 years and like see what they say. Is that directionally
Yes.
correct?
Yes.
Okay.
And that's what we've been working on is really honing in that messaging, to be very much along that line of like, why leave it up to just one CPA that might have a different breadth of experience in a different part of real estate if you can
Hmm.
get two eyes on that and kind of see the convergence, right? It's
Totally.
even this it's even the same way some people should use AI is like people ask me about that. I was like, are you worried about like Claude, or Chat GPT taking away clients? I'm like, no, because I'm like, at the end of the day, we have the system of record underneath, right? Like we know how things should map. If you upload all your financial data and stuff like that into Chat GPT or Claude Code or Claude, one, you really shouldn't, unless you're doing it in like a really private sandbox. Um, but two, it's because Claude and Chat GPT are great analysts, right? But it's not auditable, right? Like they're not going to go back and be like, oh yeah, it's because of this, 2, 3 years ago that I said it. Because again, like they're working on a shifting context window, and unless
Hmm.
you set up a whole entire system around it, like it's something that helps you steer versus like the actual functionality that gets you to there. So
Yeah. Yeah. No, that makes total sense. Can I ask some like definitional questions?
Yes. Yeah.
I, I don't. I just made up that word, but that's a word
You're
now.
good.
Um, so okay, I've heard this a number of times, like system of record. What does that mean if I'm a third grader?
Yeah. Essentially how everything gets saved. So
Okay,
it's very much that, like, you know, if you're a third grader, where is it being saved that you attended school for the past 90 days, right? Like, who's taking note of that? Is it locked
mm,
in, right? Is it evident, right? Like, no one can go back there and then all of a sudden say that you were there on the 15th without some type of override or reasoning why you're backtracking 3 months.
got it,
Um,
got it.
if you're not a third grader and you're a 12th grader or you're a real estate investor, essentially you don't rely on QuickBooks. Most people, like other platforms, there's a really big platform called Pilot, and I was thinking about using them for like the ledger side business. And when I went in and I saw what they did, it's really great. Plug to them, right? They're doing something fantastic, but they built everything on QuickBooks, right? Like their whole entire system of record is QuickBooks, and then they do AI agents on top of it for the reasoning. I'm not saying it
Okay,
doesn't work, but I'm saying as a business, I would much rather own, right, how things get recorded into Ledger, um,
totally.
versus, rely on a third party that can raise prices, take it away, change it without really any insight into it.
Got it. Okay, so you're saying that Ledger is that system. You own your own system of record. That
Yeah,
all of the data that you're putting in is owned and kind of managed by you.
exactly.
Got it. Okay. That makes total sense. I didn't realize that other companies would build on top of like I didn't realize that QuickBooks could be its own system of record.
Yep. Yeah, I considered it. I think it's really QuickBooks as an accounting tool works fantastically.
But it sucks for
Um,
real estate.
but it sucks for real estate. But it understands, right, like what a chart of accounts is. It understands how things get posted, how things get, rewritten. It keeps that audit log, all that stuff. That is everything that for years upon years, if you rebuilt that, it would take you forever. There's another company called Digits that did that. And they took 5 years to come out of stealth and launch, I think like a year and a half ago, with like that system of record and then agents on top of it. When I tried out the agents, it was a little bit less than what I wanted, but I know that they've been pushing that hard as well. Again, they're more corporate enterprise, small businesses kind of thing versus real estate, but it's the same thing. It's like it's do you want to build that whole entire double entry system yourself or not? And with AI coding, and actually understanding how it works and building harnesses, that's what we're able to do in a fraction of the time.
Got
Um,
it.
so it really just comes down to that: is like, what do you need to own? Why do you need to own it? And then doing that matrix around it. And luckily, with agentic coding, it became a lot easier to define that and rebuild it.
Totally. Yeah, that makes total sense. Okay. Okay, can we do some rapid fire definitions?
You can, yeah.
Income statement, go.
Income statement. Essentially, what money is coming in, what money is going out with your expenses for that time period. It excludes anything around capital improvements, or anything that would really be more like balance sheet stuff. Say hi to my fiance. Um, so,
Okay, but and does it include the mortgage or no?
um, usually, it won't include property. It won't include the principal payment to it. Um, you usually shouldn't include the other stuff as well. There's some, I guess that comes in. Some people will include the money that they're paying to the interest side of things, the property taxes, losses as well. You can't, you shouldn't if you want like a pure kind of more like cash flow ish income statement, but it
Hmm.
depends.
And then a cash flow statement is something separate, right?
Cash flow statement is something separate. So that is very much just looking at how much is coming in during the month versus how much is going out in relation to one, the time period, as well as, again, the things that are completely not like balance sheet related. Um, and yeah,
Okay. And yeah, perfect segue. Balance sheet.
balance sheet. That's the whole entire shebang. Whole entire shebang of it. Of you have your assets, then you have your assets, you have your liabilities, you have the equity. Your income and like expenses will come into play when you're looking at like the equity. So that you're looking at
Mm-hmm.
like, is it a net loss? Is it not? Um, and then going and going through things. And so you'll have pretty much everything. You'll have your like assets. Let's talk about it really simply. Your bank account's an asset, it's a cash asset.
Mm-hmm.
Your the accumulated depreciation from different properties and stuff like that is technically like an asset account. And then there's also then the building of like you have one property. You have the building that's asset, and then you have the land portion of that property that's an asset. It's non-depreciable. If you have tractor, like let's say it's a farm, you have tractors, et cetera. Those are assets. Depend on how much you paid for like refrigerator or stoves and stuff like that. You could potentially put those as assets too if you do a cost seg study and stuff like
Mm-hmm.
that. CapEx accounts can be there as well if they're holding. Um, so it's like a whole entire thing. You can, and then you get into, your liabilities again, loans, credit cards, all that type of stuff of where you owe someone money. Um,
Mm-hmm.
and so you took out credit lines, et cetera. Um, and, then you have amortization that comes into play with like loan terms and stuff like that.
Mm-hmm.
And then the equity side is, again, I think most people know what equity is, but it's, how much money is kind of sitting there that is above what you have in like the liability side that explains the assets. So the equation is really simple. It's assets is equal to liabilities plus equity, and both sides have to balance.
Mm-hmm.
Hence the name. To
Balance
be able
sheet,
to,
right?
yeah, to be able to say like, hey, like I know where everything is and where everything's accounted for. So that's like the whole entire shebang. The income expenses side of things is a small little piece that gets inserted into that greater balance sheet,
Mm-hmm.
to explain everything that you have going on.
Got it. Okay, that was great. Thank you. Last,
Yeah.
okay, one more definition actually. Schedule E. Go.
Ooh, Schedule E, it's what everybody hears, but this is going to be attached to your 1040A. If you're running through as a sole prop, a LLC, usually even partnerships, even though with partnerships you end up with like K1s and stuff like that. I think once you start getting into more of the high level like corps and stuff like that, it changes away from Schedule E.
Mm-hmm.
If I'm not mistaken. But Schedule E essentially is three, like one box that really is like three different things that go into it, but it's rents received for the property. So every entity, within every entity, all the properties that relate to that entity, you have to do a Schedule E. The Schedule E allows up for, I think, like three properties per sheet. So you usually have to do quite a few, or you have to attach like more sheets. But essentially, it's every property has to be reported on the Schedule E. Not units. So don't stress if you don't have everything tracked down to the unit level, but every property, rents received. And then under that, it's all the expenses. The expenses that you don't include here are going to be like CapEx expenses, or it's pretty much anything that's depreciable, and
Mm-hmm.
or your principal portion of your mortgage. So your mortgage interest is going to go here. The
Mm-hmm.
money that you've actually paid to property taxes, to insurance, even if they've gone to an escrow account and then gotten paid out later, will go here. And then all the general expenses, right? Most people end up with a really big list at the end of the year because other expenses is where a lot of things go. And then you have to attach a sheet that says, hey, I spent $500, at, I don't know, Golden Eagle or something. One definition I'll harp on is, even if you have a property manager, your Schedule E needs to, if you have a property manager, your Schedule E needs to reflect the expenses that your property manager pretty much booked that took away from the actual rental income. So it's not just your property manager sent you $10,000, you put $10,000 there.
Right.
It's that you actually charged $20,000 for rental income that year, and then $10,000 went out from expenses that your property manager did. That's a big mistake that I see a lot of people making.
Dude, this is so interesting.
I'm glad someone, I'm glad someone else thinks it's interesting.
I
I
I
find it
love this
really
stuff.
interesting. So,
All right, so I'm gonna switch to a philosophical question now. Let's say it's whatever time in the future that you insert number here, and you've built up ledger to the dream outcome, whatever that is. If that's holding and going public, if it's selling, whatever it is, your dream outcome has happened, such that you've received a pretty large financial sum. You get a huge check,
Okay.
and it hits your bank account on a Tuesday night. You check your bank account, boom, it's there. You wake up Wednesday. What do you do?
It's going to bug me, so I'm going to go back to one thing.
Okay.
Definition wise, income
Okay.
statement was what I said, right?
Okay.
Cash flow statement. I just want to go back because I confounded it. Cash flow statement is essentially bridging from paper profits to actual cash. So that's where you would actually take out like the financing, the property acquisitions, and all that stuff. Income
Mm-hmm.
statement, you wouldn't put all that stuff in. Sorry, I had to go back, correct myself for it, but okay, I wake up to just a boatload of money in my bank account. It really depends. So I'm gonna put it on like a cash figure. For me, my minimum number has always been about like 10 million.
Okay.
I can honestly, I think I might be able to make more than that, but let's say it's just 10 million is kind of my number. Um, Realistically, I look at it as a number as it's bought my optionality, my freedom
Mm-hmm.
versus, like, oh, I'm never going to work again in my life. The thing is, it gives me the option to be like, I'm only going to do this, right? Work
Mm-hmm.
wise. I'm
Mm-hmm.
very much a person that loves solving problems.
Mm-hmm.
And so like I always need something to tinker on. I made the mistake once and I took like a 2 month break. And I think after a couple of weeks, I found myself watching Big Bang Theory, and I watched like I think like eight seasons of like the 12 season thing. I'm not someone that watches TV. I'm not someone that watches movies. I read and I work, and I go to the gym and I do stuff outside. And I got up that day and I was like, oh, what am I going to do today? Big Bang Theory. And I turned it on. I was like, what am I doing? Like, I'm like, what am I doing? And that was the last time I think I actually like really turned on the TV. So that's been like 2 years. But anyways, it's something that I've always talked to my brother about too, is philosophically, it buys our freedom. I would make sure that the majority of it honestly goes into just an investment trust that I can't touch.
Mm-hmm.
Make sure that my kiddos are good to go for whatever they're gonna want to start in the future, whether that's going to school, whether that's starting their own business right out of it, whatever it is. Just make sure that they at least have that same financial freedom compounding while they're growing up. But outside of that, I'll probably live off the interest. I would reinvest it as much as I could. And I'll just take the option to do whatever I wanted in the sense of work, start whatever I wanted, bootstrap it up. Um, and keep going. I mean, I already travel a lot. Right now, for example, I'm in Buenos Aires, Argentina. I'm with some friends, and I'm with my wife's family. It's somewhere I've visited a lot for the past few years, and I just recently came back from visiting friends and family in Spain for 4 months. And so like I already travel a lot. I would keep it going, but that's kind of where I would leave it at. Now, if you gave me more than that, the thing I would love to do is I would love to actually start a small venture capital firm that's actually founder led, and actually work with people that the biggest thing for me is I didn't go live in San Francisco and I didn't build a startup when I was in New York City. So like the
Mm-hmm.
network is completely different. And the investors I've talked to in mid market are a little bit more risk adverse. Even with people that have really great ideas, really great backgrounds, all of a sudden they're like, no, we want to see you hit $1 million. And like, well, it's going to take me money to get there. Or, hey, I'm
Totally.
35. I have 2 kids. Like, I could do this. I need to execute it, but I need you to pay me. Like, I need to have some money to live on versus
Totally.
trying to live out my savings and take away that. And I'd probably go that route of really working on a bunch of other people's ideas, giving them funding, and then helping them out and working on it and bringing the expertise that I could. Um, that brings a little bit more money that you need for it, but um, that's kind of what I've thought about, and I've solidified in like what my plan would be if it happens.
When it happens.
When it happens, there you go. Sorry,
When it
there we go.
happens. That's epic,
Optimist,
dude.
pessimist, man. No,
What books are you reading right now? What's had a big impact on you?
honestly, nothing to do with real estate. I've really kept going back and rereading Ray Dalio's books on just the global economic cycles.
Mm-hmm.
So I'm a little bit boring around that. But it's really a bunch of that. Just going back and rereading a lot of economic books. Um, I haven't picked up anything in the past few months around it, but like I said, I just keep going back to Ray Dalio's because I just keep seeing kind of those same markers in most markets across the world.
Mm-hmm.
And I think it's really interesting. Outside of
That
that, for pleasure, I still read comics. Like that's like that's the other thing is I just still read comics. It's something I even got my son to start doing. He's 8 years old and he's really good at reading, but he hates reading. And so I bought
okay.
him the One Piece. I bought him One Piece manga, and I got him reading that because like he has to do his summer reading for like 30, 45 minutes a day. And then all of a sudden, this kid was just blowing past that time limit, like every time. And I was just like, yeah. I'm like, you didn't even realize it's been more than 30 minutes. So, like, his mother was super surprised, and I was just like, I'm like, he
Got
doesn't,
him.
yeah. And he's reading like complex stuff. I tested him out. I tested him out because like he wanted to play the thing like every 8-year-old does is like, oh, I don't know. No, I don't know how to read or it's too hard or whatever. And then I was like, okay, cool. I'm like, well, come here, read dad's text really quickly. So I like opened up a text message between like a business partner and I had him read it. And I was giving him like, I can't remember what I was going to give him, but it was like something he really wanted at the end of it. And like, he read through like a very complex paragraph. And I was like,
You can read.
you can read. so so I'm gonna buy you a book and then we're gonna go there. So like now, like even in the manga, he's reading like more complex sentences than he was before. He was trying to read like in my day it was Captain Underwear, and now
Yeah,
it's like now the books are is like it's what is it? It's like this dog or something like that. Um it's like it's very much in that same vein. I can't remember the name of it, but it's like a dog like action figure kind of guy. Like it's kind of like Captain Underwear, but it's a dog.
but it's
Um,
dog.
I can't
Okay.
I can't remember the name of the book for that. I can't. But like I read through it with him one night, and I was like, "This is way too basic for you." I'm like this is really basic. So we are able to switch his love and get it over to One Piece at least. So he might just want to be a pirate. That might be
Sweet.
the only downside. So
Yeah, that's all good. That's all. I
you know,
still want to be a pirate sometimes. It's all.
yeah. so
um, what are you looking for right now? Like, if someone's listening to this, and like, man, I really want to help Adrian. I know someone who does, X, Y, or Z. What would be helpful for you at this stage of life, this stage of building Ledger, etc.
um, I think I'll keep it simple because I feel like I've had the pleasure of being able to go complex in this podcast, which has been fantastic. But I'm always willing to help out other founders. I always love to hear from other founders, whether it's real estate founders or someone working on a tech company. I think it's always great just expanding the network, either giving value or getting value. So that's one. If it's more the realm of like someone that is in the real estate space, the thing that we're always trying to do is again like come over to Ledger if you have a bookkeeping problem, right? If you have an accounting problem of like being able to trust your books or like the time that it takes for you is way too long, let's get rid of that. Let's solve it. We'll solve it for a really great price, and just get you up to date, get you going, and again, you'll be able to work with a CPA that you'll trust, and it'll be all good to go. But on like the partnership side too, is like if you know people that have a particular problem in the accounting space that is interesting, that maybe I can't solve it today, but maybe in a couple months, maybe in a couple years I can, or what have you. I always love to hear that too. There's a lot of people that have unique businesses. They've structured it unique ways, complex ways. That is always good having like a ball of yarn is what I say in my head is like, it's like a ball of yarn of like, even if you don't have it as the main problem, like whenever I'm relaxing, I usually scratch at something, right? I'm just like,
Yeah.
that would be a really interesting problem to solve one day. So that's really it. It's like, again, if you have the bookkeeping accounting problem and you want to get it solved and you actually want to get it solved by a CPA as well, like Ledger's open to you. Or if you're a founder and you want to just chat, you want to network, I'm open to.
Amazing, man. And where's the best place for people to reach out to? Where are you most active online?
Um, that's the other thing. I'm usually not. LinkedIn, I'm active on. I think you saw it. LinkedIn's probably like the place where I'll respond to. Outside of that, if you wanted to shoot me an email, it's Adrian at ledger.ai. That is probably my most active channel. And I even send personal people to it sometimes because I don't want to spell out my longer Gmail email, that has like my middle name and stuff in it and my other last name. So it's like I'm like it's just send it to Adrian at ledger.ai and I'll end up seeing it and I'll end up replying to you. So
Totally. That sounds great. Yeah, obviously we'll link to everything in the episode description below.
awesome.
Adrian, thank you so much for being here, man. I really appreciate you. It was awesome to deep dive, and thank you for explaining all this stuff to us.
Thank you, Jeff. I appreciate the invite. It was fun. So
Awesome. Glad to hear it. All right, everybody. We'll see you next time. Bye.